Hey everyone, in this video we're going to be working on the homework problems for chapter 2, and as a reminder we're going to be getting some of the information for the homework problems here in chapter 2 from our course packet. And with that said, let's get started. Okay, so we've got homework problem number 2.1 here, and in this problem we're going to record journal entries. Then we're going to post those journal entries to our general ledger here in this section. And finally, we're going to prepare a trial balance at the conclusion of the problem. So kind of walks you through a big part of the whole accounting cycle. So I think this is a really good problem to work through and to work together just to make sure that you guys and gals are feeling comfortable with all the kind of parts that we're talking about in chapter 2. Because there are quite a few. Okay, right, so I'm going to be pulling information from our course packet here. Let me do this real quick. I want to do some formatting, just kind of one technique or one formatting method is putting in the year at the top, and then as we put our journal entries in, we can just put the month and day. Makes it a little bit easier. And we're in this problem, we're looking at November. And so one thing to do, that I'm gonna format this with my formatting here to be text. It makes it a little bit easier just to put in the text. If you have it on that date format and you put in certain things, it will try to change it into a date format that looks a little funky with how our general journal is set up. So I'm putting this in text format, and then typing in just the name, the month and the day. And then one thing I'm going to do, because that's what I'm going to continue to be doing as I go down, and I want those all to look the same and have the same kind of formatting and be in the center of the column, etc., like I just made for this by doing my centering. And so one way to do that easily over all the rest of the columns, because that's not the case right now, if I was to just type in November 4, you see how it would kind of put it into a certain format, and it's got 11/4/2025, which we don't really want. We're assuming it's 2024 in this problem, so we don't want that. Instead, we want this same formatting. So I'm going to hit my Format Painter button here. I'm going to hold my left button on my mouse down and drag this over all of the cells that I want to have that similar formatting, and then let go. And then when I go down through here, and you can see now whenever I type in, it's going to be in text format. It's going to be just like this cell, which is what I want. So just part of my goal in making these videos for you all is to help with the homework problems, but also to teach you these little Excel tips and tricks. So Format Painter is a real important one that as you guys learn to use Excel, guys and gals, it's going to be helpful, I think, for everyone to have that ability. That's an important one that I started using pretty soon after I got into the workforce. As accountants, we're in Excel so often, and a lot of times using that Format Painter is a real easy way to kind of take the formatting and just apply that again to different cells and spreadsheets, etc. Okay, so in this problem, we've got a number of different transactions around 2.1. And the first transaction we're looking at says Quincy Jones invested $90,000 into Music Corporation in exchange for common stock. So the business has cash, and that's an asset. So we're going to debit our cash asset. And then I'm going to hit the little indent button here twice to cause when I type into this cell, it's indented over. And that's kind of the standard formatting, is to have all your debit entries fully aligned with the edge, and then indented for the liabilities. I guess you don't have to necessarily do, maybe we'll just do one indentation. That's obvious that it's the credit. And yeah, in this problem we had $90,000 of cash coming into the business in exchange to represent the ownership portion that is, and the equity transaction. We're going to credit our common stock account, which will increase common stock. And we'll just put a quick note in here. Quincy Jones, we'll say investment. And often we see the explanations with italicized. That is kind of the proper way to do that. So I'm just going to go ahead and put that in there. And then we can, I'll show you a little trick here that might be helpful. We can copy all of these, and this actually might render my formatting a little bit unnecessary, but as I go through, if I'm seeing a way to do something a little quicker, I'm going to show you all. Whoops, I spelled Quincy wrong. Okay, so I'm going to highlight all the cells I want to copy, and I'm going to hit Control-C, or I could click this copy button. And then I'm going to go down into a cell where I'm going to paste these in, and then so Control-V. And that basically gives us the same exact journal entry and information here. But the thing that is going to be helpful about copying and pasting this in is when we paste it, it's going to retain the formatting and the indentations and the italicized and all that good stuff, and the date formatting, etc. And so then we can just go back and kind of edit this to reflect what we want for the next journal entry as it's different. So little tip for you. I think that's at least how I kind of want to approach it, the quickest way to do the journal entry. So, okay, so on the November 5th, so we can just go in and update 4th to the 5th, we paid Realty Corp $6,000 for 6 months rent in advance. And so remember that we're paying the rent in advance. So it's a prepaid rent expense. It's not rent expense yet, but instead it's a prepayment of future rent at this point. So we're going to say $6,000. So that our asset, prepaid rent asset, goes up, and our cash asset goes down. And we'll say prepaid rent 6 months for our explanation, and then we will copy and paste again, just to start with kind of a template, for the next journal entry. And this is on the 6th. So on the 6th, we performed 20,000 of services on account. So 20,000. And very important note here, when we see on account, that means that cash is not transacted yet. And in this instance, we are performing the services, and we will receive a cash payment in the future, and we're earning revenue. So we're going to say service revenue. And 20,000, not 2,000. Make sure our debits and credits equal. And then because we are doing, we have not yet received the cash, but we've earned the revenue. We're going to debit our accounts receivable asset to reflect the fact that we will be receiving that $20,000 in the future. Okay, and we are going to change our little note here. Where are we at? Okay, we'll just say perform services on account. No need for anything too extravagant there. Okay, I will go again and paste in our template. On the 7th of November, we purchased $40,000 of recording equipment, again on account. So now we want to say recording equipment asset. It's an asset that we own, is going to be increased. So we're going to debit for the increase to the asset. And again, we bought this on account, so very important terminology, and that reflects that we have not yet transacted the cash yet. And in this instance, it's not a revenue transaction, but rather a purchase transaction that we're going to have to pay later. So we're going to use accounts payable to reflect the liability that's going to be owed. And we'll just say purchased equipment on account. Okay. So let's copy and paste again. And we're on November 8th. And in this transaction, we received $50,000 in advance for services to be performed next year. So we received the cash. So we want to make sure we are reflecting that correctly. but it's not a revenue transaction yet because we're not going to perform the services until next year. So we're going to use a special liability account. Sorry, I'm typing what I'm saying. Called unearned revenue. So we have this cash, sitting in some account that we have access to, and we have access to the cash, but it's a deposit from a customer. For whatever reason, they prepaid us, and we have a liability. We owe that money. Basically, it's not our money until we've performed the services and actually have earned that money. So we'll just say customer deposit, or we'll be a little more. We'll say EMC record company deposit. In the real world, you'd want to identify who it was that paid the deposit. That's kind of an important aspect there. So, okay. On November 12th, our next transaction, we provided services and received $18,000. So in this instance, we're still going to debit cash, but we actually performed the services and earned that money in this instance. So here's what I would do just to make this a little faster. Instead of typing that out again, I'm just going to go up to a cell where we had credited service revenue previously and just copy from there, Control C, and then come down and Control V to paste that into the cell I want, just to save me time. Anywhere you can save a click and then having to type is valuable, I think, from an Excel perspective. So we'll just say perform services for cash. Okay, let's copy and paste our journal entry again. This will be November 13th. And in this transaction, we issued a check to purchase $2,000 of supplies. So we'll say supplies, and this will be a cash transaction. Purchased supplies, purchase music barn. And it's not the 18,000, but rather 2,000, I believe. Yeah, 2,000. Whoops, not 200, 2,000. The only thing you have to be a little careful of as you're going through and copying and pasting like this is definitely make sure that you update your debits and credits, or you don't leave information in from a previous journal entry. Okay, on November 14th, we received 20,000. So now we're kind of referring back to this transaction above. So in this transaction on the 6th, we earned the money. We earned the revenue, I should say, but we had not yet received payment. So we booked accounts receivable as an asset, not cash, but we're accounts receivable to reflect that we're going to receive the payment. And now down here in this entry, we're actually going to receive the cash. So now we've got cash and we've got accounts receivable as our credit. So we initially increased accounts receivable up through, and we can look in our accounts receivable schedule and so, oh, yep, that, this customer owes us the money. And then here we're going to credit our accounts receivable to reduce it to 0, so that the combination of these two entries, I'm going to unhighlight these here. The combination of these two entries brings accounts receivable to 0. It goes up and then it goes back down. And in essence, we've earned the revenue and now we've been paid the cash. So we're good to go. Okay, let's say received cash from 11/6. We'll say, we'll just leave it at that. Received from 11/6. Okay, from November 6th there. Okay, on November 15th, we paid $9,000 of wages to backup artists. So we'll say wages expense, and we're paying them cash. Backup artist payment, and that's $9,000. Okay, we're getting close here to all of our entries. On November 22nd, we placed an advertisement in Rolling Stone and received an invoice for $4,500. So we're gonna record our advertising expense because we've incurred that expense. We owe it now, but we're not, it says on it, we received the invoice. It doesn't mention that we actually made the payment yet. So we're going to book it to let's see, Rolling Stone advert. We'll just leave it at that. It was not 9,000, it was 4,500. And this is going to reflect that we owe that cash. It has not yet transacted with a payment, but we do owe that money now since the advertisement ran at this time. So expense has been recorded as we've incurred it. On November 23rd, we issued a check to pay for the recording equipment purchased on 11/7. So up here we had accounts payable go up for 40 grand, and now we're actually making that payment. So here cash is going to go down and accounts payable is going to go down as well. So we're debit to reduce our liability of accounts payable, and that was for $40,000. And that was equipment purchase, and that was on 11/7. So we'll just put that in there. And you can kind of see, just like we talked about now with the receivable transaction, the payable was initially increased with the credit, and now when we've transacted the actual cash to pay it down, we debit it. And so the credit and the debit bring accounts that balance to zero. Cash gets credited to reduce to show the payment, and then the recording equipment has been debited, so that asset has been increased. Okay, one last transaction here on November 24th. We received an invoice for $5,500 for security received in November. So we'll say security expense. And again, this is us receiving an invoice, so a bill in the mail, but we did not, we'll just say Guard Co. invoice November. How about that? That sounds pretty good. We incurred the expense. We owe them this money now, but we haven't transacted in cash yet. So we're going to book an increase to our liability of accounts payable. And yeah, we've got all our journal entries now, so you can kind of see how all those fit through. Again, you could start from scratch on each one and do all the stuff, but I just find that copying and pasting as like kind of a template and then updating is probably the most efficient way of putting the journal entries in. But it does run the risk of accidentally carrying over something from a previous entry. So, going through, making sure, double checking, self-review is probably good on this kind of thing. So, okay. So now we've got all our journal entries above in our journal, and then we've got all of our ledger accounts down here. So we have cash, accounts receivable, supplies, prepaid rent, and in this problem, we're essentially assuming that there is no beginning balances, and we are operating under the assumption that the this business is just been started in this month of November, essentially. And I mentioned that because if we had a previous activity, we would need to put in opening balances for some of our accounts. But since we don't have opening balances, that won't apply in this instance. But we have a bunch of transactions to record, so let's go ahead and do that. So let's take a look here. We had cash debited on November 4th. And so again, or let's do it this way. So we've got 11/4. We can do an equal sign to our explanation, and then we can do an equal sign or a plus to link up to the transaction. And let's do something here for these general ledger asset accounts. We're going to have a normal debit balance. So let's go to, in our shoot, I'm blanking on the terminology there. In our rolling balance and figure here, we're going to be taking our debits minus our credits essentially. We have nothing in credit in this entry. And then as we go down to the next transaction, we're going to want to start with the cell above. So the beginning after we book this initial transaction, this running total, that was the word I was looking for, will, for an asset account, it'll take a debit increase. So this total previously plus the next debit minus a credit, if there is one, in F60. And then we can take our mouse cursor until it gets that black X there in the bottom right corner, click to drag it, and then we can just drag that down. And what that's going to do is allow us, you can kind of see as we go through here and type in our debits and credits, to automatically update the balance in the running total. So let's do that same. Now I'm going to Control C to copy this formula, and then I'm going to come down and I'm going to paste that into the second row and further down in the rest of the asset accounts, so that when we put our information from debits and credits in, it's going to automatically update, and you'll see that once we do the linking and put those in. So I'm just Control paste, Control paste, Control paste. I'm not doing the top row because this one, the first transaction in any one of these asset accounts would not add anything above it, right? Now, okay, so that's all of our asset accounts. Now for the liabilities, we want to take a little bit of a different approach. And because liabilities have a normal credit balance, we don't want to start with our debits like we did here. We're linking to the debit. Instead, we want to link to the credit balance, and we want to minus the debits and add the credits, right? Because the credit liabilities on the opposite side of the accounting equation, liabilities are increased with the credit and decreased with the debit. So we're starting with our credit normal balance, and then we're decreasing anything if it ever debits, which it will, as we mentioned, it went up and down to 0, and then we're going to increase with the credit. Okay, and then again, we're going to drag that down, and now I'm going to Control C to copy and just paste that same thing, that same formula in for other entries here that are increased with the credit, including common stock, unearned revenue liability, and service revenue. Now, when we get back down to, I'm going to copy from the last asset of a recording equipment, that formula here, Control C. I'm going to come down to my average. When I'm looking at our expenses, I'm going to paste in the same entry from the other asset accounts above, because the assets, just like expenses, increase with a debit. There's only one expense transaction, I believe, for each one of the expense accounts, so that's kind of a moot point because I don't think we're going to have multiple, so we don't really need a running total if there's only one transaction. But I think it's still good practice just to learn how to kind of use Excel formulas in a certain way to reflect running totals, like in a ledger. It's important use of Excel and just getting comfortable with formulas, so on and so forth. So, okay, so we want to make sure we get our debits and credits. So now common stock. Let's go to our common stock account, and I'm going to link. We've already got the date and the explanation shown above, so I'm just linking to those. But I'm going to put my credit in there. And one thing I guess that I should have done. Sorry, the final step here for setting up our general ledger accounts, we do need for this first column, this first cell to pull over a balance, we will need to equal that. If we're automating this, essentially, we'll need to equal the debits for all of our asset accounts. I'm going to skip over the liabilities and go to expenses, because our formula here won't work unless we're pulling in the cell above it. and we need that formula to just pull over. We don't have to add anything above it. And then for all of our liabilities and accounts that increase with a credit balance, we can do that same formula essentially, but just equals the first credit that we put in. And then I'm going to copy and paste all those, and you can see how that just pulled that in right away. And I think that's everything. Okay, perfect. All right, so with that said, yep, that was our first transaction. I'm just going to, and just as a, maybe this is helpful, I'm just going to go and highlight when I finish maybe I'll put it on both of the debit and credit. But now that we've got that one filled out, I kind of just highlighting to make sure that as we're scrolling up and down that I'm like, okay, this one's done, on to the next. Okay, so now we've got cash being credited. I'm going to just go to that right away. And when was this? November 5th. And I'm going to link to the explanation. And in this instance, we are crediting cash in this transaction. And you can see that automatically reduced. So that's our formulas at work. It's automating all that. And we did our cash, and now let's go to prepaid expense increase. And from here, again, we can just link up to the last, because here's the credit portion, here's the debit portion. They have the same explanation and date and all that stuff. So okay, so we did our debit there, credit, cash, debit, prepaid rent. So we're looking good. And let's highlight the cell next to there, telling us that we've finished. Now we got debit accounts receivable November 6th. I'm going to link up again. Perform services on account, 20,000. And we've got the other side of that entry is our service revenue. So I'm going to link to there. And we had our debit above and an increase. The service revenue is the credit portion. Oop, I didn't highlight when I first put the AR in. That's okay. Now we had on the 7th, we had recording equipment with the accounts payable. 11.7. And recording equipment of 40,000. And accounts payable, the same date, same explanation, but that's going to be a credit. Oh, I missed my formula there. Link over to that for our liabilities. So you can see that pulled over this, and then this is just automatically a running total. No transactions here yet, so there's nothing that really is changing in terms of the total, but as we input, it will automatically update. So okay, recording equipment and accounts payable. I think I did both of those. We got the debit and the credit. Yep. Okay, let's highlight to indicate completion. Okay, we've got cash and unearned revenue, and that was on November 8th. That was our prepayment, and we're debiting. We received the cash, so automatically updated. And then that's unearned revenue, though, on the other side. So I'm just going to link to that same transaction, date, explanation, but a credit. And I'm going to link to the journal entry here. Okay, we got both debit and credit input there, so I'm highlighting. Next on the 12th is cash and service revenue. And we're debiting our cash because we received that money, so our cash goes up. And let's go to service revenue. And let's credit that journal entry for the 18,000. Okay, now you can see our revenue is going up to 38,000. So we booked both of those sides of the entry. All right, and now in the 13th, we bought some supplies for $2,000 cash. That was on the 13th. So 11/13, That was a credit to cash. So we did that side, and then supplies is the other side. So I'm again linking, just linking up here. This is an asset account that we're increasing, so we're going to increase that with our debit. And we've got our debits and credits both recorded. There's the credit, there's the debit. Okay, we're getting there. November 14th, we earned, we received cash from our accounts receivable transaction. Excuse me. I'm going to put in my explanation, and here we go. We got our cash finally. Our customer paid us. That's awesome. So that's our debit, and we want to reduce our accounts receivable to reflect that we're no longer owed this cash. And so now we're going to hit the receivables account with the credit. And you can kind of see first it went up with the debit, then it came down with the credit, ending up with a zero balance, which tells us, as you know, accountants, that we have no one that owes us money at this time. Essentially, if we were to look in our accounts receivable account, earlier before the 14th, we'd see 20,000, and it would be in our system that we'd be able to say, oh, this specific customer owes us that money, and so if they don't pay us that money or something, we have to do follow up. That's how we track the amounts that we are owed, essentially. Okay, we did both those. Okay, wage expense, paid cash. So on the 15th, for our backup artists, and we want to record our wage expense as the other side of that entry. So let's go to cash, or date, and our explanation. Link up to the entry there. Whoops. But in this instance, we want to debit our expenses to increase them. And so hopefully you guys and gals, you can see that how the journal entries and the debits and credits are really just, you kind of break this entry apart, if you will, and you put the specific pieces of it into the ledgers for those accounts. But that's really all we're doing, is just recording the same thing, just kind of in a different, record, a different report, etc. Okay, on the 22nd, we had some advertising expense and recognized the liability for that. And that was November 22nd. So let's go to accounts payable to start. And it's a Rolling Stone advertisement. And we had an increase to accounts payable of $4,500 with a credit. So you can see that running total is working. And then our advertising expense will be the other side. And we're debiting our expenses to record those. Okay, we got our debit and our credit. Mark those off. A couple more transactions. Okay, here we're going to pay down our liability, and we're going to be crediting cash to do that, reflect that payment, and then debiting accounts payable to reflect the reduction in that liability. So on the 23rd, link up to that. Cool. Okay, and now you can kind of see we had 40,000 credit, got debited. It's the only thing left in AP accounts payable at the end of the month here is this $4,500 for that Rolling Stone advertisement, because we paid off that portion. Okay, now we're going to add 5,500 more into it. But so our last transaction here is an invoice that we got in the mail on the 24th. So we're going to link up there, and accounts payable liability increase with a credit. Mark that off. And our final transaction, our security expense, will be on 24th for that, and we're debiting our expenses to increase them there. And that's our last piece. Whew! All right. Well, good job following along, everybody. I know this is kind of doing a lot of this work is one way to become to appreciate modern accounting software systems too. So like a QuickBooks or something, because what QuickBooks will do is when you just input this journal entry, all of this work that we're doing behind the scenes to list date, explanation, so on and so forth, this all just happens automatically in a modern accounting system. So yeah, maybe we'll have some appreciation for that after this class of having to kind of manually do a lot of this work. So, okay, we're at the end of the process, and we just want to prepare a trial balance now. And so to do our trial balance here, we're going to want to have we want an account. We want to list the ending balances for each one of our accounts. That's what we're trying to do. And so I'm going to show you a little trick. At least here's how I would do this to make this a little more quick, if you will. So I'm just linking up to this title, so I don't have to retype all the names. And then I'll show you a little trick to take out some of the things that we don't want. This our account, we just want the cash. We just want it to say the name of the account. And I have a little method for doing that, which I will explain here in a moment. So recording equipment, accounts payable, unearned revenue, common stock, service revenue, advertising expense, security expense, and finally wage expense. So hopefully we have all our accounts in there, right? So now you can see these are all formulas that are linking up above, but like I said, I want to do some work to remove this verbiage of account equals space, etc. So first thing I'm going to do is I'm just going to highlight these and double click to kind of format those, increase the row height to account and show everything. Then I'm going to break these links and hard paste this basically. And so I'll show you how you do that. If you don't want the links, but you want this information to show just as it shows, you can highlight all the cells, right click, copy. So now you've copied everything, and then paste, and you're going to paste values here. So you drop down the paste button and you use this first paste values. And so then what that does is it no longer has a formula in the account, in the name, or in the pulling this in, and it's just the text essentially. And then once you get the text the way it is here, we don't want this account equals space. So I'm going to go into my formula bar or into the cell, highlight what we don't want, Control C to copy, then enter just to get out of there. Now I'm going to highlight all the cells. I'm going to go to find and select. I'm going to go to replace, paste in what we don't want, just straight up what we recorded, and I'm going to replace it with nothing, which is another way of saying I'm going to get rid of it. And then I'm going to hit replace all, and you can kind of see how that automatically deleted the stuff we don't want. So little Excel trick for you. And there's that's kind of how I would approach it. You could just go through and manually, it's got too many spaces. You could manually, type this stuff in, but, learn some little tricks along the way. I think that's helpful to do the pasting, hard paste the values, and then go through and delete stuff you might not want. Okay, so with that said, let's link in all our ending balances now and see if we got all our debits and credits in correctly. So our cash, we have 0 for AR. Our supplies, 2,000. Prepaid rent, 6,000. Recording equipment, I think, what was it, 40,000? Yep. Accounts payable, 10,000. Unearned revenue, 50,000. Common stock, 90,000. Service revenue, 38. Now remember, keep your debits and credits in the right spot here, so your expenses are all debits. And now the moment of truth. Let's go here and do our auto sum function. So we're summing up everything above 188,000. All right, our trial balances. This has a funny little underline. Let's get rid of that. So we've got 188,000 on debits and credits, and that is looking pretty good. So I think that we did everything right. There is always the chance that we end up doing something wrong and you won't catch it. If you put two in if you did an entry twice or had the wrong amount, but you did a debit and a credit, you could still have errors in your debits and credits. But our trial balance at least shows us that we didn't do a one-sided entry with just a debit, not a credit, or a debit amount that didn't match a credit amount, because we can see that the debits equal the credits. And then from here, this problem doesn't ask for it, but then that's where we would go into preparation of, we would do adjusting entries, which we'll learn in the next chapter, and then prepare our financial statements based on our trial balance. So kind of a meaty problem, a lot to this one, bulky problem, if you will. But I think this is a really good problem, and this is real accounting, real bookkeeping, from the perspective of journal entries to ledgers to trial balances. These are all the kinds of things that accountants work with all the time. So hopefully this all made sense. Again, if you guys and gals have any questions, please let me know. And I'm going to make this video as a standalone just for the length and put this up for you all to be able to view. And yeah, let me know if you have any questions. Thanks, everybody.